back just after 3 p.m. Going into the final hour, it's 3:25. Let's go ahead and get started. Major level at 6,400. Lots of resistance. I think we try our best to possibly get there maybe tomorrow. I mean, the market's up from an open today around 68, came down to 60, up to around 77. My dead zone for the day was exceeded barely. I didn't want to take on the necessary risk. The market was really slow today compared to the melt up yesterday. Friday will be interesting. I think if we tag that 6,400 level, I am looking to be short. I'll talk about that. So let's get into the charts. This yellow box was my dead zone from today. We got outside of it, so there's some good profit potential. I didn't take a ton of profit today. I got out for like a 10-cent winner. It was basically break even or better. We didn't get much higher than 79 back into the dead zone. 80 close to the dead zone. 81 back into the dead zone. I didn't want to sit and wait all day with the risk that was on that trade, so I closed it out for break even or better. Tomorrow's a new day, and we'll tackle it. Also, the levels I was watching all morning, we had a nice little level of resistance around 75, 80, and 85 SPX. We are holding and sitting right at it. So biggest ceiling at 63.80. VIX level, 64 or 15 to 20 today. If we had a top, if the market was going to rip up about 0.95, 0.96%, the VIX is all the way back down to 15.16. So from the VIX in 16, we're now back into the 15s. I still think that the VIX is due for a squeeze. I still think that the S&P is due for a pullback. I'll talk some key levels here. Why do I think 64? Well, I'll show you some of the data. There is a monster level here. This is market maker exposure extended. 6,400 is huge. You can see all this clustering between 63.75, 63.80, 63.85, and there's a monster outlier level at 6,400. You can see this as well at 6,400. Today, based on volatility, this was around the 100% ATR, so it's not a surprise we didn't get there today. However, it's still a magnet of price. If there's a liquidity hunt, the market's going after 6,400 for a tap. I just don't know if we have much going to the upside. If I go back to the exposure here, 65 is another big level. I just don't know if that exposure that's for all expirations. That could certainly bring in August expirations, September expirations. I'm looking at more like, what about like tomorrow? What about, 0 DT? 64 is a big level, but probably not too much further out than like maybe by Friday or Monday of next week on SPX. Okay. We also have a big level here. There's the same thing, like big negative gamma at 6,400. So to me, that's a pretty massive roadblock. I do see either one, a lot of profit taking, two, tons of call options, call option volume that's going to be sitting there, covered calls, selling calls, taking profits. And if the market melts up higher, that's fine. It's just there's just such a big absence. And next week is the end of the month. So I think if this market is doing anything right now, it is just clinging to the fact that we've had a nice little reflexive rip since the lows in April. I know this chart's a little bit messy, but you have the big move. You have the big move from April's low, which with the market, the candle itself was like a 15% candle. Okay, I think it was it 15%? So from top to bottom, about a 15% candle in April. The market still closed negative for April, but barely. And then we just continued to rip in May, rip in June, and then it's more of that like we're in drift mode, right? We had two thrusts through June and July. The one was the 90-day pause for tariffs, which was April 9th. The other one was the U.S.-China trade pause. That was another 90-day pause for China. That was a big rip. That was a big gap to the upside. And then we had the ceasefire with Israel and Pakistan, right? So that was enough of a thrust to get the market to then drift. We go back to the daily time frame. I am kind of surprised that the market hasn't had more of a fluctuation than what it has. These are the two gaps I'm talking about. You can see here, there's the China-U.S. trade pause. There's the ceasefire agreement. And then 1, 2, 3, 4, 5, 6, 7, 8 candles to the upside. We did pause a little bit. We are just slowly melting up a little bit more. Okay. Overbought conditions are registering on all sorts of time frames now. I do want to pull back the good old momentum oscillator as well as relative strength. So I'll bring up another workspace here. Let's talk through those. Let's go to blank. Actually, that's not right. I don't want to go blank. I want to go to harmonics and pivots. So there it is. So the zigzag is still looking for a top. My daily 14 period and 21 period relative strength are sitting at overbought conditions, and we are making slightly higher highs in price, but momentum is not agreeing on the daily time frame. Let's go to the weekly. Okay, the weekly time frame, we still have one more week. Momentum from the lows has still been up here to the highs. We don't really have divergence on the momentum oscillator. We also, on the 21 period and 14 period relative strength, we don't have overbought conditions on the relative strength either. So let me see here. So we're not quite at the 70 threshold on the 14 period. Let me check the value here. So I have a 62, the 21 period is a 62.9, which we're looking for like 70 plus is overbought. And the 14 period on the weekly is 66.5. Again, not quite there from the technical, like a 70 value on the RSI is pretty big. A 75 value is quite large. And an 80 is, very rarely do we hit 80 on an overbought oversold condition. So 80-20 is very difficult. 70-30 is kind of more industry standard. Okay. So that is the cues. So daily showing all the signs of overbought conditions. So I'll go back to QQQ daily. So we're at overbought conditions on the daily. We are seeing momentum disagree as well. If I go to the SPY, okay, we are overbought conditions and we're getting some disagreement. We've made a couple all-time highs again this week. I think that makes 12 or 13 for the year so far. After obviously like starting out with all-time highs and then dropping hard through March and April. We're getting a little bit of disagreement between price melting up these last like 3, 4, 5 days into the divergence with the momentum oscillator. And then let's go to the Dow. The Dow is making some fresh highs. This is actually pretty interesting. The Dow, yesterday's pop in the Dow, we have price here, making higher highs. A little bit of disagreement on momentum and a big disagreement there on relative strength. So I do see some hidden bearish divergence on the Dow. Maybe this thing stalls right around the highs. So Gerald asking about the US 30, then we're looking at the DIA. So US 30, DIA very similar. If I go to the US 30 right here, okay, it's showing pretty similar, right? We're making just slightly higher highs, so this high to this high, and we're showing some disagreement, and we're showing some hidden bearish divergence on relative strength. Again, when I show this divergence stuff, it doesn't mean that the top is guaranteed. It doesn't mean the timing is perfect, but it just means like just get ready in anticipation for a bit of a correction. That's all it means. I'm going back to what I'm looking at technically. I think this is pretty straightforward on the SPX. Give me a percentage. Everyone watching right now, like, give me a percentage of what you think a pullback is. Okay. I'm not interested in a 1% pullback. Okay. I'm talking about some really clean technicals that hopefully give us a decent reason to buy the dip. There's 3 key levels that I'm watching right now. Okay. One key level, and I'll put this in thick, and I'll put this in, let's go yellow for like a highlighter. Okay. One key level is going to be right here. Previous all-time highs. So the previous all-time highs are on 61.45. This is SPX. So if we pull back to that, does last resistance level that we fell from, does that become a support level? That would be 1. Okay. The other one is they're kind of right in between. One's above, one's below. The 21 period moving average is another very near-term level. The other one is the 50-day moving average. So if I want to box this in, I'll use my highlighter tool here on TradingView. If I box this in, if I go from the 21 period to the previous all-time high to the 50 period right in here, okay, this, and I'll label this. I'm just going to label this pullback window. So I think we have a pullback in here. Doesn't have to be anything wild and crazy, just a little bit of a flush. I don't know what the catalyst is going to be. I don't care. Okay, I just know that something technically should help this market pull back a little bit. Now let's talk percentages. Okay, let's talk percentages. By the way, for anyone watching today, I'm just going to do a soft little plug. If you'd like to join me every day to trade with me in the mornings, I run a daily profit plan room at 9 a.m. Eastern time. This is free to join. It's I post it through Zoom. I think I'm going to figure out how to run it multiple ways. I'm going to try to run it in Zoom as well as YouTube. And so tomorrow I'm going to do like a test to make sure I can push it to both. If I'm running it on Zoom and YouTube, obviously it's for as many users as possible. The goal is we're going to trade every single day. So I've got a macro Monday, technical Tuesday, watch list Wednesday, trending Thursday. We did a scan today and found some nice stocks and a good filter for 52-week highs, profitable companies, looking for trading opportunities. And then tomorrow to wrap up the week, I'd like to take a trade where I can get some money within the first couple hours and then be done. Okay. I just highlight some of the services that I do run. These are all paid member services where I trade with members in the live markets. I also post these as alerts as well. I mean, I think between these services right now, we probably have over 600 trades with wins. My most active services would be you trade with me every single day in daily profit play. You trade with me every single week on waterfall income. And then typically I see some pockets of activity where, certainly the big earnings pockets every quarter. We trade a lot newsbreakers. And then I'm looking for major outlier levels and double ups. And then pinch point, I'm looking at a scanner every week to find a nice little watch list of stocks that are ready to pop. This is a volatility scanner. So I'm looking to see cheaper option prices, low volatility, and looking for volatility expansion. And this spoon feeds me like 20 trades. And I've got like 9,000 I search for. And I think this week we had a watch list of like 22 stocks. Crash insurance, I teach people how to protect your portfolio. I am a trader that cares very much about the downside. I think the best thing I do for my accounts is I care about the downside so much that I try not to lose money. Because when you don't lose a lot of money, it's easy to make money. These markets are very generous with upside as long as you don't lose money. So the ability to hedge for good reward to risk. I have a trade on we took this week actually. One of my followers in these sessions, this YouTube session, we talked about hedging. I put a trade in on MES, which is the micro S&P futures, and I put a hedge on for $250 that could potentially pay me $2,500. So I do that across a bunch of accounts. It might help me, alleviate some of the noise and some of the pain that might come with a little 3, 4, 5% correction. This one is a little bit more advanced, but I have a lot of fun in this course because this is essentially how I manage money. And then if you want some big bonus education, practical options, $27 course to get started, just get you enough knowledge and education. I taught this like I'm teaching an 80-year-old, an 89-year-old that's never seen the financial markets ever, but learn how to trade some options, or a teenager that's never seen a financial market either. So young or old, if you're brand new, I tried to build it in such a way that it's pretty straightforward. So if you'd like that information, check it out. If you want to know about any of my services, our team at Prosperity Pub does a great job. Support at prosperitypub.com, and you can check it out. So service names, come trade with me live. I'll try to push this out every single day. And if I get these recordings also archived on YouTube, that'll be nice to get more people in the room. Okay. All right. So let's talk percentages. I mentioned this level right here. This level right here is the past resistance level. This is the 21-day moving average, and this is the 50-day moving average. So that's my pullback window. It could be more than that. We could obviously have the market, move down to this level and up and down again. We could have the market move quickly down, up, and then down again. Key support in my world right now, it's like the market should maintain posture above 5,700. If the market can stay above 5,700, this bull market, I believe, is still here to hold these levels and still try to get back to highs, if not higher. Targets on the year, I'm seeing targets have been revised up to 6,500. There's targets out to 7,000. It doesn't matter. I mean, calling a target by the end of the year is literally anybody's guess. It doesn't matter. But I'm saying that momentum-wise, we certainly have what it takes to keep this resiliency going, to keep this melt up going. We just passed a massive spending bill. So yes, we have tax cuts that have been extended. We're adding $3, $4, $5 trillion to the deficit over the next 10 years, but it's a conducive environment for prices to still go up, right? The Fed isn't really doing anything in rates. The Fed is likely going to be cutting over the next 6 to 12 months. And if the bond market remains stable, if the employment market in the U.S. remains stable, if the consumer remains stable, all these little legs of the stools, as long as nothing is kicked out and broken, I think this market's going to remain pretty stable. Options guide. What's the question there, Adrian? So this, I highlight these services. This is what you're joining. If you want to pop in live to my sessions, you're joining my daily profit plan. So what I'll do at the end of today's session, I'll share my link on Telegram. This is my Telegram channel. So if you'd like to join in on Telegram, I'll share this. And this is where I post, here's my watch list that I posted earlier today. This is the link you can join live with every single morning. So this will get posted around, 8:30 to 8:45 a.m. Eastern time. And then I pop in and we do some work. What was this? Mag 7 earnings for next week. This is the trade we shared yesterday. We grabbed 100% credit on one of our trades for daily profit play. And then just, obviously going live. Trades yesterday, closed out 2 winners on my project option edge service. Pinch point scanner, we had one winner hit for profit, and we had two added trades in. Newsbreakers took a trade on Tesla and on Google, actually. I'm going to edit this one. So ticker Google. So I posted Tesla Google trades yesterday and that. So anyway, that's the best place to follow along with, like, where I'm just able to showcase, communicate, talk about all my services and what's going on. And then there's the classrooms and the individual channels where I share all the trade details and stuff like that. Okay. The practical options, if you want that education, this is a separate link. The quick guide is $27. The full course is $497. I do have a strategy guide PDF if you like it. You can just email me for it and I'll give it to you, or jump into my live session. Give me proof of purchase and I'll send you a strategy guide. Okay. Everything else has its own classroom and in master classes and recording, stuff like that. Very good. Okay, let's talk percentages. So pull back to the 21 period, pull back to the previous resistance, pull back to the 50-day. Let's talk those percentages on SPX. I still think the market can melt up a little bit higher. I think the market can melt up to the 6,400 handle, maybe poke 6,400. I'm a pretty aggressive seller around that 6,400 level. I think if we are lucky, timing-wise, this market is going to just stay here, maybe a little up, maybe a little up, maybe a little up. And then once we get into August, I think the market's going to have some type of pullback, some type of pause, some type of flush. We've seen the VIX drop from, like, it was at 19.5 last week when Trump announced he was looking to fire Powell. Whether the press asked him or he said it, I don't really care. But the reality was the market didn't like it, and the market responded very negatively with like a 0.7% move intraday. So that all happened last week on Wednesday. It's right here. If you go to the stock, this is SPX. This was last Wednesday. That was your big drop. The market opened, fell a little bit, and then big drop about 0.74% intraday. And then it picked itself off because it was like, that's not true, right? Denied it, wasn't going to happen. And the market's like, okay, noise. And it's right back up to grinding higher again. And here we are, higher highs, higher highs, higher highs, higher highs again today. The market from last week, low to high, the market's climbed up by another 1% this week. Market's up another 1% this week. Okay. So market does what the market does best. It keeps melting up. It's hard to look at this and be like, yeah, I'm crazy bullish right now. I mean, I'm happy that the market is melting up. I'm happy this market is going up. This is easy trading for a lot of investors out there. This is good, right? But the sad reality is most people experienced, they were here to start the year. They dealt with a crazy drawdown and they're just now getting back into profit. So most people from a buy and hold standpoint are maybe seeing like 4, 5, 6% returns, while the market's only up about 7 to 8% for the year. But active traders and positioning allowed this dip to become extremely profitable. So fortunately, I've come out on the right side of this move pretty nicely, and I still think there's more to come. But right now, that pullback level, if we have a pullback from current price, like I said, we can still get a little bit higher. We can go up to 6,400. We might drift a little bit higher than that, but be aware that a pullback of maybe 2% is certainly in the cards. I'll pull back to previous all-time highs is around 3.3%. I'll pull back to the 50-day moving average is around 4.5%. That to me is my kind of minimum pullback zone, is around 4 to 5%. Okay, so I'm saying like 4 to 5% expected pullback. We have gone days and we have gone time and we've gone distance away from all these moving averages, which have lined up to be some pretty good outliers. And it's unusual for the market to do that. Okay. By the way, today, if I've got any traders watching, they're in my daily profit play, that dead zone top was 63.70. If it stays inside this yellow box, that's where the risk is coming in. That's why I got rid of the trade earlier today. So hopefully, whoever's watching daily profit play, you're out of that dead zone trade. You had about 50 to 60 cents a contract in here over the last maybe hour or two to close out for some profit. Now it's back to the top end of that dead zone. Obviously, if it stays above it, great. If it bounces right here, goes back up, you're fine, you're clear, stayed above the dead zone, nice profit on the day. But if it comes into this red box, the full loss would be around 63.58.90. If you're less than 63.58, is that right? I don't think that's not right. I think the break even is a little bit more than that. So 390. I'd go from 670 down 390. In order to take a full loss, we'd have to drop all the way down to, let me go, 390 is $4. So we'd have to go 6,356. So there. So if the price came down to 63.56.10 today, that's where I would take my full loss. So we have a little bit more buffer, but there's risk. There's risk from 63.59. There's risk from 63.60, obviously. But ideally, the market, we want to keep it above like 63.60, so that $1.10 we can pull in would be full credit. Okay. So anyway, that's where the risk is at. So I'm curious how it finishes. I'm not holding the trade to a close like I did yesterday. I got out early today for a small winner. I got out for a 10-cent winner. So it was more just protect the risk. So far for the week, let me look at daily profit play. We started out on the 21st. So 1, 2, 3, 4, 5, 6. We've gone 5 for 6 this week. Profit wise, we are up around. Profit wise, I'm up around $700 this week on some daily profit play. Not too bad. So I'll take it. It's not a bad week. Could be better, could be worse. But today, if it stays in this yellow box, I would have been taking on a risk of about $390. So don't have to worry about it. All right. What else? Let's talk percentages again. 4 to 5% expected pullback. Does it automatically stop at the 50-day moving average? Not necessarily, right? One thing we talked about was wave structure. Okay. I've mentioned this in several past sessions. If we go low to high, that's 1, pullback 2, push 3, pullback 4. This is the slow grind, agonizing move to the what? 5th wave completion. Okay, if I put on a fib right here, fib from low to high, okay, I mean, this has played out. I guess we could go a little bit higher. I guess we could get to like 64, 6,500. I guess we could. I still think we have a pullback. So, because it wasn't like a 38% pullback. This was a rip to a 50618. Back here, we go low, high. If this hit 618, I'm going to be kind of mad. Let's find out. This pulled back. Yep, it didn't hit 618. It hit like the 50, about 55%. It was close though, really close. All right. Anyway, I'm going to drag this up just a little bit higher. So I've got some fib levels, 23%, 30%, 38%, all finding some nice dynamic support in here between this 50-day down to this 200 moving average. This to me would be trying to position for dips. Okay. So I will be looking, so especially for my waterfall income service, we'll be looking at some trades that allow us to take advantage of this area and see if the market wants to go right back up to highs. So the more traditional waterfall income that I really love to trade, will be more active in that here if we have that pullback. And I'm like excited about that because we've been kind of passively participating in this melt up. We were aggressively positioning for the margin for error here, and we've had a nice run. We've won 92.5% of our trades. We haven't taken, I think we took 1 to 2 losses as the market was dumping from December, and then we've counted our way back and traded through it. And this has been a nice run all the way through with steady gains. So I'd like to see just a little bit of a flush. And the way I could see this playing out is either 1, we have a small pullback, dead cat bounce, small pullback, and that's it. Pullback here, find past resistance, become support, and then the market's right back up to highs and just on we go. Continues to melt up. Okay. Or something gets a little bit more serious. Maybe we pull back aggressively to the 50-day, pull back, dead cat bounce, and then one more flush to the downside, get into this area, and I'd still be looking to position for, maybe this level as a line in the sand. Maybe this level as a line in the sand. Okay. Maybe this level as a line in the sand. Okay. I don't think the market just turns over at the top and goes all the way back down to April lows. If that happens, we're talking something in this stool has to break. Employment, housing, consumer, jobs, I guess jobs is employment, or the bond market or the dollar. The Fed, Trump, that drama there is like something like that has to be a big enough catalyst to take away all these gains. I don't think the trade war is going to do that. I don't think tariffs are as big of a deal as it was back in March and April. Clearly, the market overreacted to it and the market's pivoted hard. The narrative around tariffs have changed quite a bit with the U.S. sitting back at all-time highs. I also think that the U.S. is now like re-establishing itself as a good, viable, investment. Where it seemed like earlier this year, it's like non-U.S. invest non-U.S. Like China's up 20+%, Europe's up 20+%. Emerging markets have had a good run this year; they're up like 12 to 15%. And the U.S. is like the U.S. is going to underperform. Well, look at it now. It's just the U.S. market continues to be pretty incredible, pretty resilient. I still think a pullback needs to happen, but if we get one, great. I'm still going to position for it. I've got some hedges in, so hopefully we can take some short-term hedges. If we hit like 6,000 or lower, that should offer up a decent, maybe a 2, 3, 4 to 1 versus a max 10 to 1 because I don't want to time it and hold it all the way to October, December. But anyway, type in a wire yes in the chat if those make sense. Anywhere between about a 4 to 5% pullback is what I expect on the minimum. It could get worse, right? We could have like a nasty flush here, dead cat bounce, another flush lower. Maybe it becomes, maybe in the 10, maybe 10 to 12%. And I say that because during COVID, we did the same thing. We had a big 30+% drop. We melted all the way back to the highs, and then we had 10% and then 8%. And then the market continued to go higher. So if it looks something similar to that, I think like 4 to 10%, 5 to 10%, maybe up to 12%. Could it be worse than that? Of course, the market can do whatever it wants. It could be worse than that. I just don't expect that to be the case. Right? Okay. So watching those levels, you can look at the NASDAQ, see the same thing. QQQ, we've closed X amount of days above the 21-day moving average. We are now point-wise on the QQQ. We're about 28, almost 28 and a half points above the 50-day. It's pretty unusual to get that high above it. It's pretty unusual to go this far above the 21-day moving average as well. That bear call spread was a loss from last week. No big deal. So I just continue to grind. But look at the dynamic support, right? Support here. If it goes down and then down again, lots of support, right? Lots of support between the 100, 144, 200 moving average. So if you're looking at timing anything, this area of support, obviously this gap right here, a big level of support. There's I'd say a lot of demand down in this zone. So between I'm looking cues here, like 520 to 490, I think it's a great spot to be like taking some bites and trying to buy this market back up after a correction, if it even comes down that low. So I think honestly, I'm pretty excited about a couple of services moving forward. If we get the pullback and dips that I want, I think double ups benefits from that. I think that waterfall benefits from that. And obviously we'll be grinding every day in daily profit play. So again, going back to this, active trading every single day, waterfall income, really nice swing trades, and double ups looking for some big levels that'll give us 100+%. So that's the way that's going to work out. That'll be good. So SpyQ is watching both of those. Let's talk Dow. Just shy of the all-time highs. This might be another thing as far as the melt up goes. Maybe it melts up to the highs and then fades. Another one just based on the daily. 21 period, 50 period. Looks like we can have a pullback. 21 period, 50 period. Pull back to this level. A lot of support back down here. Equilibrium back down here. So and honestly, and I don't know if the market, I hope the market doesn't do this where it's going to be like this big fake out. And when everyone's talking about, oh, this is coming right up to a double top. It's like, is it though? Is it? Is the market going to come up to this resistance level and then sell off? If that's the case, it's like, what are we doing? We're adding fiscal spending. We're going to have a Fed that's going to be cutting rates. I don't know why the market would all of a sudden just implode. Looking out 6 to 8 months from now, is the market that bad? Is the economy that bad? Is the global economy that bad? I don't think it is. So I don't see a macro picture. I think if anything, this melt up is more permanent than we think for right now, at least until and I don't know, but this isn't a political thing, but it's like the U.S. policy change wouldn't really be a factor until midterms in 2026. That's when voters can say, look, we're unhappy in this administration, let's change it. So they swing the other way, and then what happens? What happens to the big beautiful bill? What happens to the trade war? What happens to tariff? What happens to whatever? That's the problem with the 2 and 4 year political cycle is you can change this crap. And or you all of a sudden midterms flip and then nothing gets passed. And so Trump these first, pretty aggressively 7 months has put a lot in motion. And if he can maintain the majority, then hopefully, more stuff gets done. And if it helps the economy, great. And we're in the discussion of the E-shaped recovery, not the K-shaped recovery. So the K-shape was this, right? Where the haves and the have-nots kind of experience the gains and losses. And now we're trying to look to pivot to something like an E-shaped recovery, which is this is the K. Okay. And now you flip that to then the K continues to the upside, but then pivots to allow the downside to start playing and participating in the game too. Hopefully that's the case. So that is better for everything if that is truly where we're going. It's a big question mark, though. I don't know if it's really there or not, but that's kind of the agenda for this current administration. Okay. Tesla, yeah, Tesla dropped about 20 bucks after earnings. It's a lot of it was just automaker stuff. So IBM, what was IBM? IBM down. Do I have a trade running on IBM? If I do have a ratio spread, let me see what it is. Do I have IBM? I do. IBM stuff is up in profit. I'm doing a 215. Yeah, I'm doing a ratio spread on this one, a 215 by 210. So I'm still in profit. Yeah, I'm doing this. So my lows on IBM that would have to be threatened would be this price has to drop and continue to drop. My 215, 220, or I'm sorry, 215, 210 is down here. So IBM has to just get absolutely pummeled from these all-time highs for me to see any risk on that trade. That was for Project Options Edge. My Tesla trade. So I'll have a discussion on this one. The newsbreakers trade that I took is likely going to be a loss unless the thing just rips up tomorrow. I'll move this chart alarm back down to 332.50. Okay. So if we get back to 332.50 tomorrow, that's a hell of a recovery for Tesla. If we get it, then I take profit on the newsbreakers trade. If I don't, what I'm going to look for is going into tomorrow. Okay, go into tomorrow is if this continues to push lower, 290, 285 area, I will probably end up keeping some shares of Tesla and repairing for some income. I had ratio spreads. I'm flipping this thing for profit. I've been like taking shares, rotating, flipping, adding covered calls. I'm just owning shares, covered calls, owning shares, covered calls. Collar trade is what helps me take protection to the downside, but I get less credit on the trade. So to check it out, whoever that question is from, IBM is an easy trade, 215 by 210. So there's still plenty of flexibility on that one. And then on Tesla, I might end up taking some assignment if we push lower. Okay. So I did another trade this morning on Tesla with my Project Options Edge. I added another trade here, Project Options Edge. I added this trade in on Tesla. So I'm doing an August 1st, which is next Friday. I've got a ratio spread. I'm looking to see if price will stay above 290. So if price stays above 290, which is another $16, we'd have to fall another $16. So if it stays above 290, I keep $1.85 credit. If it falls to 291, 292, I get a little bit of a profit trap on that ratio spread. And I'm also willing to own the shares. So I may not use that 332 put assignment. I might just close that for a small $125 loss and then take the shares at 283 and then flip them from there. Now, granted, I've got to make up about 120, 120, so 200 and what is it? I guess I'd lose 130 and 125. So I'd have to make up $255. So if I flip Tesla with covered calls, as long as I make up that $255 loss, I'm going to try to make a net like, maybe $1,000 net, maybe $2,000 net. So I'll just repair it. Okay, Tesla earnings had it. They already had it. It was today. It was yesterday after market, so this is the reaction to it. So Tesla's down. And it was, the site, it was just like, I don't know, EV credits were a bad thing. It was like everything I saw was automaker. Like the positive side of Tesla is you got to be willing to look past the automaker, and you got to be willing to invest in the optimism of AI, energy, chips, humanoids, automation, profit margins. I mean, I don't know if this is the company or not, but I would think if I'm going to put one person in charge of being fully automated without having a single human working for them, it's probably Elon Musk. I'd say between Jeff Bezos with Amazon and Elon Musk, I don't know why those companies wouldn't just be like long-term plays to like make them the most ridiculously profitable companies. I think they're both also crazy and driven enough that they want to be the richest men in the world. And one of those two, I think, is going to be the first trillionaire. Just a matter of time. I say Elon Musk is probably a little bit favored because of what he has in private equity with SpaceX and the others, sales he's done. It's like Tesla has like given and taken a lot of his net worth, but SpaceX is just gaining tons of traction in the private equity space. We'll see. I don't think the government stuff with Doge did him any favor this year, but I still think Tesla as a future play, it really can't be denied. It's also finding some good support here right at the 200 moving average. So if it's, down today and then starts to come back tomorrow or next week, it wouldn't be a surprise. I'll just still sell covered calls. No big deal. Trump to visit Fed Reserve to ramp up pressure on JP to cut rates. I mean, he's already going to cut rates, man. That's the thing is like he's going to cut rates. It's like the Fed right now is like a pause in July. So I don't know if this is going to be. I just saw today that Hulk Hogan died. Sad to hear that, brother. I just saw that today, 71 years old. Fed watch tool. So probability of a cut is 2.6%. Right now, the Fed probability is not, I mean, this would be like a surprise. If the market sees a rate cut next week on July 30th, that's going to be a surprise. It is not priced in right now. Now, if the rate gets cut, is that a good thing or a bad thing? I mean, to be fair, I mean, this is an interesting argument because to be fair, you could argue that if the Fed cuts, it's basically, satisfying Donald Trump and the pressure he's put on them. Okay. But for some of the macro economists out there, a Fed cut is also, maintaining independence and assessing the current market and the current economy, which is things have slowed, right? Things have slowed, things have stalled. And if that is truly the case, the Fed needs to be a bit more accommodating. So cut rates, be less restrictive. But price action ultimately tells us. Okay. By the way, daily profit play, what would have been our result today? Daily profit play today would have been dead zone. So we saved ourselves $390 today. So that's a good swing. So all in all, I feel pretty happy that I saved myself $400 of risk today. I'll take that as a win. Even though I didn't make a ton of money today, I'll take that as a win. I saved myself $400. Okay, so to Lee's point there on visiting Powell, I don't know, man. I mean, honestly, it's price action. So when does Trump visit? Does he visit next week on July 30th? Does he visit before July 30th, where they have Fed next week? Tariff deadline August 1st. It's like next week is a pretty wild week of volatility. We have Mag 7 earnings with Apple, Amazon, Meta, Microsoft, all huge $1, $2, $3 trillion companies. Okay. We have FOMC for a pause. If there's a surprise, I'm sure the market's going to be super volatile with that. And then we have the firm August 1st tariff deadline. And then what's the world look like with trade after August 1st? So we've kind of inked the deal with Japan this week, and the markets liked it. They've melted a little bit more. Now the pressure is trying to get Europe on board as well, right? So how do I keep track of everything? I don't know. I've only done it for 20 years, so it's kind of my beautiful mind routine where a lot of it's just my spreadsheets. My spreadsheets, I just track all my stuff in a spreadsheet, and then I just find it. Search for it. I know I have the trades. I comb the portfolio every day, and I just look. I talked about this morning in my live session. Go to my days to expiration, and I find out like, okay, right now these like 1 to 8 day expirations, those are front and center with like stuff I have to manage. So anything inside like 20 days, I'm usually like double checking those positions, making sure I don't have to do anything or do something, and make sure I can keep positions like pruned and hopefully like actively gaining more profits. So that is the plan. Yeah. All right. Back to this. So any questions? So we'll see what happens if Google stays above 190 tomorrow. Let's see. Google's trading at 192. Post is 192. My Google trade here, I think I needed to stay above 190. Yep. So I got a 187.50 by 190. It's right now up about $70. Max profit on the thing is 119. So if we stay above 190 tomorrow, then I will keep that profit. That was a Newsbreakers trade. And then Tesla, I might just take the dump. I'm like I said, I'm risking about $255. Is that right? Yeah, $255. So if I lose on this one, I might just take the loss. But this trade is a ratio spread that pays $330. Okay, so I can make up for those two losses with a ratio spread. Let me do this one here. This is a ratio. Actually, I take the back to $1.85. So this ratio spread's $1.85. But I'm also willing to like own the shares, and this potentially has a profit trap of $500. So I could make $680 on this trade, which will more than make up for the other two. But this account doesn't have any exposure to Tesla, and at the very least, if I own the shares and add cover calls, I can probably make $2,000, $3,000, $4,000 on it over maybe the next 3-4 months. But a collar trade might be a little bit safer to make sure I have some downside protection. But just covered calls do pretty darn well in the stock, and I'll keep at it. So All right. Anything else? Any other questions? Earnings. So I think we have Intel today after market. Let's go stock twits for a second. Earnings. Let's go to Friday. Everything's going to be before bell. So Phillips 66, Charter Communication. Looking at some major ones here. Anything here? Actually, let me check after market today. So let's go after bell. After bell, some notables. Tootsie Roll with some earnings today. Liberty Energy, Scholastic, Intel. This would be one to watch. Intel after hours. See what that one does. Deckers has earnings after hours. It's quite a few. Boston Beer after hours. Okay, and then tomorrow morning. So Intel is the one that kind of caught my attention this week, and then before bell tomorrow. Carter's, is that the food maker? I know, because that's my son's name, and we got lots of clothes from them. Yeah, I should buy their stock, maybe. I don't need to buy. I don't want them failing. Anyway, all right. What else? Looking for something tomorrow. Charter, Phillips 66. That's it. So we kind of I'm trying to think, kind of like just drift into earnings tomorrow. Intel's a big one today. Let's see what happens. Next week's Mag 7, Apple, Amazon, Microsoft, Meta, and a bunch of other stocks. We probably have 400, 500, 600 stocks or more next week reporting earnings. It's all going to be about Mag 7. I think like the bigger majority is going to be whether Mag 7 is up, the market goes up, the Mag 7 is sideways, market goes down. It's probably going to be mostly based on current earnings per shares, current revenue, forward guidance, anything positive coming from it. We'll see what happens. But there's a lot of volatility lined up next week. CocaCola, they had earnings this week already, right? CocaCola had earnings. We're trading at 69. I've got a cover call out to I think my cover call is at $65 or $66. And I'm just going to continue to roll it. So morning link tomorrow. Yep. So I'll go and wrap it up here. Here is my session. If you'd like to join me inside of Telegram. So if you want to join, add subscribers, click on the link here. So this is Chris Pulver Telegram and the daily profit plan at 9 a.m. Eastern time. Link provided daily in Telegram. Okay, just posting that out for chat. And then if you'd like to join my Discord, Discord is Chris Pulver Trading. This link is going to be good for 30 minutes. Okay, and then Chris Pulver Trading Discord. Good for 30 minutes. Okay, Intel after hours. Did Coke have earnings already? Yeah, they had earnings a couple days ago. Intel is after hours today, if I'm not mistaken. Pre-market, I'm already seeing up a little bit. It's up about 80 cents. I will probably end up rolling some calls on this. I have some trades. I think $23 to $23.50 is my cover call on Intel. So right now, Intel, I have all the shares. I've got a $23 call August 1st, which is next Friday. It should be enough to roll it for another like 30, 40, 50 cents. My break even on Intel's like $21. So I wasn't trying to make a fortune here, but if price is going to stay up, I'll just keep rolling calls. It's not a big deal. Like even if it's like 20, 30, 40 cents, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 1,100 shares. So if I have 1,100 shares and I can make an extra 30 cents, I mean, it's $300 every couple of weeks. I do that for a month. I do that for a couple months. It's a couple $1,000 to add to the portfolio. So doesn't have to be pretty, doesn't have to be perfect. I don't have to chase all this crazy appreciation. If the market's going to rip on Intel, I can just generate steady income and stay with it and keep it in the portfolio for a little bit. Okay. Coke should have already had earnings. I'm on the chart right here. KO. They had earnings on the 22nd. Yeah. So earnings were positive. Price is down a little bit though. So still pretty well supported at the 200 moving average. One thing I'm also kind of liking, I've got a put combo here on MO, 57. I think it's 57.50, like a little boring stock. 57.50, 55, 52. I mean, it's willing to own 400 shares. Last year I was willing to own 1,000 shares. I took a little bit less out of it, but it's $850 by the end of the year if we stay above 57. If I take on any shares, I've calculated the break even. It's going to be like $50, and it's a dividend stock. I'll have 400 shares of it. The allocation would be about 20 grand. Yeah, and just maybe 50 cents or $1, sell at the money covered calls, turn it into an income trade, collect like a 6-7% dividend. I mean, last year MO made me like almost 100 grand. So sometimes boring stuff gets the job done. Everyone's trying to chase these high flying stocks, and that's great. There's been some high flyers this year. It's been an awesome bounce since the bottoms in April. But at some point, markets stop going up and they go sideways or down. I'm trying to make sure that I can still make money regardless of what the market throws at us. So, all right. If you'd like to join me tomorrow morning, jump into my Telegram channel. The Daily Profit Room will be opening up at 9 a.m. tomorrow. Tomorrow's going to be Fast Money Friday. We'll talk through our trades and strategies, and the more the merrier. All are welcome. Plenty of time to soak in the education, soak in the markets, get some levels for the day, get a game plan, get some top-down analysis, and hopefully, see that there's ways to get the job done. And just here to help. So, all right. That's it. We'll wrap it up there for today's final hour. I'll see you tomorrow for the Daily Profit Plan Room, 9 a.m. Eastern Time. And I'm going to try to push out tomorrow on Zoom as well as YouTube, so you can check it out. All right. Okay. On MO or any covered call, do you own the shares first? Yes. If you're going to sell a covered call, Joy, that's because you own the shares. Otherwise, you'd be doing a naked call, which is never a good thing. If I'm selling calls, it's usually because I'm doing a bear call spread or some type of spread trade, or I own the shares and I'm trying to collect the premium to lower my costs. So if I owned shares, which I don't own shares anymore. I took shares of MO. I bought MO last year at $40, and I rode this thing up to around where was it? I think I closed out around $56 last year, around $56. So I took that price appreciation, and then what I did this year, since we're just kind of hanging out around these levels, is I just put in naked put, naked put, naked put, naked put. If I get assigned, well, technically speaking, if the market pulled back and I get assigned, I'll take the shares. I'll see if price wants to go back up on its own, and then I'll sell more covered calls, right? Or I take my assignment and I just repair it and just keep adding covered calls and rolling covered calls to make income. But I want to be careful with a stock like this to sell too many covered calls, because this dividend around 7%, if I sell calls and I'm in the money, I don't get the dividend. So I want to make sure that if I'm selling calls, it's like slightly above the current price, because I want to be able to get counted for that dividend as opposed to not getting it when I own shares, right? If I own the shares, I get the dividend. So selling calls can take that away if it's in the money. Okay, let's do this again tomorrow. Let's do this again tomorrow. All right, Daily Profit Play Room tomorrow morning, 9 a.m. I'll see you then. Jump on in, say hi, and we'll have a little lesson. Tomorrow's lesson, I'm trying to think. Give a little preview here. Tomorrow we talked at the money, in the money, out of the money. Today, I think tomorrow, let's talk about. We'll keep it kind of simple. Let's spend some more time on covered calls tomorrow. So we did break even this week. Let's spend some more time on covered calls. We'll get some more lessons in through that Daily Profit Room as well. But tomorrow, let's focus on covered calls. Actually, you know what? I don't think Copilot. I was going to build another one out here for. I'll do it tomorrow. I need to make a note. Repair/assignment. This to me is like one of the more important lessons that I've taught over the years. If you've ever been assigned stock, I've seen people make some terrible decisions and they get very emotional when it's like, what do I do? I just got assigned 100 shares of something I don't want to own. I don't have the money to own it. I can very simply in a couple of steps teach you how to get out of those trades for the same risk you took originally. So there's a couple scenarios with that. We could talk about doing this with naked puts. We could talk about doing it with credit spreads. The chance of assignment on any of these things is only about like 5 or 6%. like 5, 6, 7% chance of assignment. When you trade as a U.S. trader with American options, anytime the market could be assigned. You could be assigned anytime. It's rare that you get assigned if you're, out of the money. But when you're in the money, sometimes you're like the one person willing to own the shares, and you're like the bag holder, and so you get attached, right? So anyway, I'll add a thumbnail here. We'll talk about that. I'd like to have that lesson tomorrow if we can. I'll try to do like a maybe 20, 30-minute segment on that tomorrow. Okay. So those are like income plays where you keep lowering your ownership cost. Yep, that is exactly right. So I'll give you an example. Here's my spreadsheet. Okay, I'll show you an example of MSTR. MSTR, I started this campaign trade for a couple of my accounts. I bought shares at $346. I now own those shares at $243. I'll say that again. I bought shares starting at $346. I now own shares at $243. I've lowered my cost basis on MicroStrategy by over $100. Look at all this. Roll, 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 roll. Just covered calls. Doing the math, rolling covered calls. It works. It helps. And so now I have plenty of upside. Now, to be fair, I am selling a 310 covered call and the price is trading at like $400. So I'm still eating some of that appreciation, but I'm going to keep selling these calls. Chris says not allow me to enter, have an account with password not matching. Sorry, join Telegram. Discord, I have like, a little security on there, so I just get a bunch of random people. Sometimes you have to have like a verified email and phone number to get in my Discord, but I do that because every week there's like people impersonating me, so I don't want a bunch of crap in my Discord. But if you join Telegram, that should be easy. That's just a phone app. Jump in, and you can just get the messages here in real time. Okay, Joy, does that make sense? So covered calls are fantastic. Option trading around a core position is fantastic. It's just understanding how to do some basic math where you take your ownership price. So I buy shares right here. I sell a call. If price stays right here, I've now taken that premium and I've lowered my cost basis. I do it again. I own shares here. I sell a covered call. Price doesn't go up above my strike. I lower my cost basis by that premium. I now own the shares here. I sell a covered call. Price goes sideways. Right? It's like you can do this over and over and over again. Price doesn't have to go anywhere. If I own shares, I sell a covered call and price goes up. Well, the nice part is I get the shares called away, but I also get a share with premium and I also get the upside appreciation. So I get the stock goes up and I get call premium. So it's like a bit of a bonus, And sometimes there are stocks when I'm like, I don't want to let the shares go. I'm going to keep rolling covered calls and I just do it. Like MicroStrategy is one of those. Coinbase was one for a little bit. Tesla is one right now. And if it generates income, I just keep doing it. So anyway, all right. Tomorrow morning, 9 o'clock. I'll see you then. Let's go. Let's have a big room tomorrow for daily profit plan. Let's have some fun. I'll see you for Fast Money Friday. All right. Take care, everybody. Thanks for being here. Kindly hit the thumbs up button, like, and subscribe, all that good stuff. I'll see you tomorrow. Let's do it again. All right. Bye.